What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible and also practical. So without further ado, let the intro roll and I will see you on the charts. The pair that I want to speak about in today's video is EURJPY, because this pair has just created exactly the move that we wanted to see from our previous analysis. So it's definitely time to make an update to see where we can be looking for the next potential opportunity on this pair. And as usual, I will be keeping this analysis as educational as possible. So first, we will be speaking about the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are currently doing in the market, and then by using the combination of our order flow analysis and our technical analysis, we will be able to understand where we have the highest probability setup. And as usual, this breakdown will be highly educational. Now, starting here from the monthly time frame, what do we have? Now, here on the monthly, we have a market which has just created a nice impulse, correction, and impulse pattern to the upside. Now, generally speaking, after the creation of an impulse, correction, and impulse, you definitely expect the market to start another correction. In fact, what you would actually like is for the market to provide a correction at least to the 0.382 of the Fibonacci taken on the impulse leg. So taking our Fibonacci from the low to the high of this impulse, we can see that the first retracement level from a Fibonacci standpoint is exactly this level here, the 0.382 of the Fibonacci taken on the impulse leg, which is a quite strong structure level that we definitely expect the market to go and test. Now, in this specific case, what we can also notice is that this 0.382 is lining up perfectly with the previous resistance, which, now that the market has broken it to the upside, is turned support, meaning that actually at this area we have a confluence of support given by this previous resistance turned support with the 0.32 of the Fibonacci taken on this monthly impulse. So this very strong confluence of support area is definitely a level that we expect the market to test before a potential rejection to the upside. Going down on the weekly time frame, what do we have? Now here on the weekly, we can see how the market has just reached exactly the previous high. In fact, this area was acting as very strong resistance here, and we can see how at the moment we're testing exactly the same resistance from which there is a high probability of seeing the market create another rejection to the downside. So here on the weekly, we're testing very strong resistance and we can expect the creation of a potential double top at this area. Going down on the daily time frame, what do we see now here on the daily? I had spoken about EURJPY quite a few times in the past. I spoke about EURJPY after the creation of this overextended W formation. When the market was at this area, I made a full breakdown explaining all the reasons for which, from this zone, we expected the market to provide this move to the downside. And in fact, that is exactly what the market did. Then from here, I made another breakdown explaining all the reasons for which we expected the market to provide this continuation to the upside. And again, that is exactly what the market did. Then from here, I made another breakdown explaining all the reasons for which we expected the market to provide this move to the downside. And once again, that is exactly what the market did. Then from here, I made another breakdown explaining why we wanted to see the continuation to the upside. And again, that is exactly what the market did. Then from here, I made another breakdown showing why we wanted to see first a correction and then the continuation to the upside. Then we had this impulse to the downside, break of structure back above. So unfortunately, it was impossible to be looking for any kind of shorts. And we had the creation of this W formation, after which I made another breakdown explaining why we wanted to see a move to the downside for a completion at the neckline, which is the previous resistance turned support. And once again, that is what the market has just created. And by the way, I will link in description all this previous analysis. So you find all this previous analysis linked in description, so you can go and check it out for further reference and more free education. If you have any questions or requests for the next video, make sure you leave them down in the comment section. Also, make sure that you smash that like button and subscribe. But at the moment, what do we have and how we can be looking for the next potential opportunity here on EURJPY? Now, if we go and see what we have from a COT perspective, so the COT data for the non-commercials in the market, which are the biggest speculators, what we can see is that with the last reports, hedge funds have been decreasing their net positions on the euro quite aggressively. In fact, we went from having 163.4k net positions all the way down to 67k net positions, with 3.6k shorts added with the last report and 2.5k longs getting closed. So the euro is actually getting quite weak. And if we go and see what we have on the JPY, we can see how lately on the JPY, net positions have been decreasing quite drastically. In fact, we went from having 50.5k net positions all the way down to having 57.9k net positions. So the JPY is actually getting quite weak here, with net positions dropping, reaching 84k short positions and only 26k longs, which explains perfectly why EURJPY has been creating this continuation to the upside, because the euro was getting weak, but the JPY was getting even weaker than the euro, and that is why EURJPY has been creating the continuation to the upside. However, what we can see here is that finally with the last report, we see net positions that are starting to increase from minus 59k to minus 57k, with 2k longs getting opened, meaning that we could finally see the JPY start getting strong again and EURJPY potentially creating the move to the downside. However, the way in which we will be approaching this with students is as usual being reactive and not predictive. So all this area is resistance. If the market will manage to break with an impulse above this structure, all this previous resistance will be turned support at this zone. So after the break, on the retest of this previous resistance turn support, instead of this area, what we will be doing with students is monitoring price action from a 4-hour perspective and lower, waiting for the market to provide to us one of our valid entries. Now, why on the 4 hours? Because the monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the directional aspect of the market. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So if the market will successfully break above this structure after the break, on the retest inside of this area, we will be monitoring price action from a 4-hour perspective and lower, waiting for the market to shift from a 4-hour and lower bearish market as we have right now to a 4-hour and lower bullish market. And as soon as the market will shift from a bearish to a bullish market, at that point, we will be adding EURJPY to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside and for the market to provide a higher high. On the other side, if the market from here will break to the downside below the structure, then in that case, we will have a very similar scenario, because if the market will manage to break below this support, at that point, all this previous support will be turned resistance. That is how the market works. Previous support, once it is broken, is turned resistance. So if the market will successfully break below this resistance, actually now is support that will be turned resistance after the break, on the retest inside of here, once again, we will be monitoring price action from a 4-hour perspective and lower, waiting for the market to provide to us one of our valid entries. And with students, as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to complete this impulse correction and impulse pattern to the downside and for the market to provide a lower low. And this is exactly how we will be approaching here EURJPY with students in a reactive way and not predictive. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also let me know in the comment section below any pair that you would like me to break down in the next videos. And I will also leave a link to the mentorship program in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day, I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering any question that you have every single day. So it's a very complete program. I really suggest that you go and check it out, and I will see you in it.